Hi everyone, a very good evening. You're watching The Money Show on ET Now. This is your daily dose of personal finance brought to you on your television screens. Everything that you need to know for one whole hour. I'm Mubina Kapasi and let's take you through what we have lined up today on the show. First at 5 p.m. we will be joined by the CEO of Angel Broking, Vinay Agrawal. We'll be talking about the advent of technology in broking, which has become extremely imperative given the fact that we're all in lockdown, and the more digital you go, the better. And also, of course, since you will be going digital, it will lead to a lot of DIY investment strategies. So we'll get Vinay Agrawal as well to share or give you guidance on how you can go about in your portfolio and asset allocation strategy. Next up, it's a realty special. So today we'll be taking forward the entire conundrum of buy versus rent, which has got all of us wondering as to what we should do. Should we buy a property and pay EMI, or rather, instead of the EMI, pay rent? What are the pros and cons of each? And more importantly, in this market, which one would be the more prudent option to opt for? And for those people who are looking at realty as an investment, well, here's another kind of investment strategy in realty itself, and that's fractional commercial real estate. Strata is the company that has been has put forward this investment platform as fractional commercial real estate for all of you viewers. So we'll be bringing on board Strata to talk about why, or rather what are the benefits Strata provides to retail investors like you and me, that too in a space that was largely limited to institutional investors. Well, like I said, it's an action-packed day right here on The Money Show. But first up, like I said, we are going to be bringing on board a very special guest, and that is Angel Broking. We have with us on the show Mr. Vinay Agrawal. He's joining us right now. Mr. Agrawal, really appreciate you joining us today on The Money Show. And I think I must first start off by talking to you about Angel Broking app, the ARQ technology that you all have incorporated in the app. And I'm sure that you as well have seen an increased amount of traction on the app, especially during this lockdown, because in the last 3-4 months, what we've observed is that a lot of individuals have opted for apps like yours and indulged in a little bit of trading, a little bit of investment as well. So how important is this entire technology angle then, to be used as an investment platform for retail investors?
Yeah, hi, good evening, Mubina. Thank you for calling me into the show. So as you rightly said, technology is a great enabler, it is probably the biggest enabler, So what it does really is, it creates 4 pillars, it brings a fundamental change to the way we kind of work, So these 4 pillars, if I can talk about it, is like first is accessibility, second is the affordability, third is the ease or convenience, and fourth is, it's a truly great leveler. So let me talk about each one of them. So when you talk about accessibility, so there was a time, if you just go a few years back, when if I have to open an account, I have to meet that person. So there was an in-person verification, which is a regulatory need. Today, with the help of mobile internet and Aadhaar, I'm able to do it on a video IP. What is the change because of this? As you asked, today I'm able to really get customers in corner of the really able to get customers from small towns, small villages, perhaps where you could never set up your own branches. And it has been a big amount of change. So let me tell you, the number of accounts that we are sourcing now versus just a few months back has gone up by close to 2.5, 3 times. And this is only possible because we are able to source clients. 70% plus of my clients are coming from tier 3, tier 4 cities. And this is only truly possible because of this whole technology kind of enabling it to customer to do it DIY. And then, I'm able to do all the process there. Second pillar is affordability. So when you talk about these small towns and, people young, so now most of the customers that I acquire are like 30 years or below that. They are new to the market. They need to, learn this market before they really start investing it. So the first bets that they are going to put, should, is there a platform where it can allow them to, invest into small amounts, let's say few hundreds to start with, and then gradually getting into some few thousands. So then affordability really plays a large role, and technology really allows you to do that. You also look at the cost of those transactions, So for a lot of digital organizations like us, we charge 0 commissions on investment. So you see the real benefit of it. You're putting small amounts, absolutely no cost into investing. So that's another important pillar of this whole change, fundamental change that technology has brought. Third is the ease, convenience. We all know how it is convenient and easy for customers to invest into the stock market using a mobile platform. And you talk about ARQ, so that's another game changer for a company like us. What we are essentially doing is we are helping our customers to understand their risk appetite by just using a simple, rule-based investment engine. It helps them to give them right advices, the right stocks to pick up, and at the ease of sitting at their home at the time that they want it. It is accessible 24/7, and you can place your orders at any point of time. The fourth pillar, let me talk about it, is a great leveler. So there was a point of time when, people will say ki, that person sitting in Bombay, right in the heart of city, has a lot of sources. He will know information, he will know news much ahead of us. So, he will be able to take much better informed calls. Those are the days gone by. The technology has really made it a great leveler. Now a person sitting in the remotest part of the city or, of the country will have the data and information at the same point of time when somebody sitting right in the center of the finance center comes to know about it. So I think the technology has really played a great role in terms of making this whole process so smooth. And so what has also happened, if you see the growth in the demat accounts that has been happening over last few months, you will see a larger participation of retail is happening. All of them, bulk of them are coming from tier 3, tier 4 cities. They are young guys. My average age of my new customer is less than 30 years, which clearly shows new customers are able to come, take bet onto the stock market, learn the market, and take advantage of this whole technology.
Well, Mr. Agrawal, I must say that it's not just the younger ones, but I know quite a few of my relatives who are older as well, who have been using digital apps like yours to put in a trade or two. So they definitely as well are learning the tricks of the trade and staying abreast with the latest technology. But I want to dwell a bit more on what you mentioned about how in the hinterland as well, or in the tier 2, tier 3 cities as well, tier 4 towns as well, people have been using your app to sort of invest their money or to trade in the markets as well, and that's particularly interesting. However, what's also important is that an individual must acknowledge that their knowledge may be limited, especially if you may not be very savvy with the equity markets. That may be the case even in fact in metro cities like a Mumbai or a Delhi. You have individuals today like doctors, teachers, professors, all of whom are in this lockdown, and hence they have downloaded apps to sort of trade. But the fact is that their information would be limited. Now, I see that, one of the key features which I particularly like is the personalized advisory that the app does provide. So what kind of literature is available on the app? And I'm sure you would stress on the importance of all individuals who are using the app to trade, or who are basically trading in the equity markets, to use all of this literature.
So absolutely true, Mubina. Thanks for pointing out this. So all investors, when they get into the stock market and when they're new, whether they're from tier 1 cities or from tier 3 or tier 4 cities, they need to learn this market well before they start investing in. So the another advantage of this whole technology thing is, right now we have all kind of content. So we have small videos, 2 minutes videos to 20 minutes videos for a small investor, for a first time investor, to an expert trader. So what really, the technology is enabling us to do, and our app is, helping the customer, is kind of learn the stock market in whatever stages of, their, trading history they are into it. So if they are new people, they are new to the market, there's enough amount of videos, content, or we have also have audio podcast and content, we kind of tell them, what is stock markets, the basics of the stock market, how to put their first trades, what parameters to look at it, how to start trading with a small amount of money, how to use stop loss effectively, and how to build up a kind of portfolio. And if you kind of grow up the ladder and you become an real expert trader, we have the data like, very deep data about, let's say, future and options, how the derivative analysis, more deep and thought on the derivative analysis, how the call put ratios are kind of behaving, what is the kind of volatility index behaving, what kind of strategies they can do. So we have real, automated strategy builder tool available into the app. So I think, the app kind of provides right from a basic investor to an advanced trader. So it has all kind of data, information, videos, chats, blogs, as well as tools to help all kind of investors.
Okay, excellent. So I'm sure the advice as well that Mr. Agrawal is giving everybody, that first read up on the literature and then put in your trades on the Angel Broking app. There's a plethora of information available on the app itself, videos, etc., that you can always access. And of course, in today's day and age, frankly, all of us, I think, more, and I'm sure Mr. Agrawal will agree with me, we are suffering from the syndrome of TMI, or too much information rather than the lack of it. Okay, well, let's now get some investment advice as well, since we have Mr. Agrawal with us. Mr. Agrawal, how important is diversification? In fact, when I look at your app as well, it's not just about share trading. You have information on mutual funds as well. So basically, it's a one-stop destination for all of my investments. So how important is diversification for everybody? Because the tendency is then to overtrade, especially when everything is available in your hand. The tendency is to sort of, punch in one more trade, or go that little step further, or take on board that extra risk. So how does diversification play a role?
I think diversification is the key, is the fundamental key to making wealth into the stock market, or any industry for that matter. If you put, all your eggs into the one market, what kind of risk you kind of carry. So the real fundamental way to make money into the stock market is, so I can tell you there are four pillars that all investors should keep in mind, while investing into the stock market. First, invest into good quality stocks, good fundamental stocks, companies which are run by, great management team and which has real good financials, and, you have some history around it. The second important pillar is, diversification. Never over invest into one particular stock. Create a basket of 15 to 20 stocks, and more importantly, also ensure that you don't take, overexposure into particular industry. Your kind of investment should be fairly spread out. The third very, very essential thing is, don't try to time the market. That is the best thing to do, in this market. The real method is, can you do a monthly investment instead of a lump sum investment? Can you invest regularly into the market so that, you don't really worry about the volatility into the market, So that is the third important pillar. And the fourth, and another important aspect of it, the stock market, is what is your tenure? Don't invest into the stock market with a small time tenure. Then if you look at all the kind of volatility, and if you see over a longer period of horizon, you'll always find the people with a longer horizon always ends up making money. So I think these are the four fundamental basics of investing into the stock market, and it is extremely important that investors don't put all their money into a single stock, or they take too many positions into a specific industry. It should be fairly diversified portfolio that they should build upon.
Okay, all right. Don't put all of your eggs in one basket. That's extremely important. When you diversify, even if, let's say, something happens to one aspect of your portfolio, the other aspects can help sort of cushion it and ensure that, you don't lose out all of your money if in case there turns out to be one bad investment. It's extremely crucial for everybody to understand this concept. And I guess mutual funds as well, in a way, do practice the same concept, right? Wherein they enable you to invest in a basket of stocks which is packed into one fund or one unit of which you get to hold. So that's, of course, about diversification. Now, another question we're asked very often, Mr. Agrawal, is that we on the Money Show, and I'm sure you as well, always recommend your clients that, yes, especially for the long-term investors, if you're investing in mutual funds, you have to buy right, sit tight, or when you are sitting in the mutual fund industry or buying units, you have to buy and hold and keep it for the long term, a coffee can, if you could call it that, and all these terms. However, the mistake that a lot of people make is that they do not look back at it at all, and that's really the problem. Now the market has rallied. We have seen a nice uptick come by, in the equity market since the lockdown blues. Do you think now is a good time for people to review their portfolio and maybe, put in some chops and changes in their portfolio?
Mubina, if you ask me, I think, reviewing and rebalancing your portfolio is a continuous activity. You cannot define that this is the right time or, that's the wrong time. All throughout your, investment horizon, you have to regularly look at reviewing and rebalancing your portfolio. So obviously, if you invest into mutual fund, then there is an expert fund manager who's kind of rebalancing and reviewing your portfolio. But if you have created your own stocks of, in the portfolio, then it's a continuous activity. And at this point of time, when you know okay, this pandemic is really creating a fundamental shifts into our economy, it is more imperative, it is more important for us to kind of review and rebalance our portfolio. This is a time to kind of exit some of the vulnerable stocks, some of the vulnerable industries. This is a time to increase your exposure to companies which we believe will have advantage or could leverage the digitalization. This is a time to invest into the companies which has more rural focus, which has little more essential items focus. So I think other than this time also, it is always necessary that you kind of regularly rebalance your portfolio. But times like this need special attention to rebalance your portfolio.
Yeah, all right. And it's very tricky as well to do that. So, Mr. Agrawal, when somebody is looking at their portfolio, when maybe they're looking at this interview and they realize, okay, you know what, maybe even I should now check in my investment portfolio what's there, what's not there. Understandably, of course, many of them, especially if they invested in the last 2 years, they'll be seeing red on the screen, or rather on their statements. I mean, stock prices may have fallen, NAVs as well have depleted quite a bit. So, if you could share your advice on how to critically review your portfolio, when you say monitor your portfolio on a constant basis, what should be the red flags, if you could call it that, which make you believe that, okay, you know what, this is the investment now that I need to remove from my portfolio because it's not doing any good and it may just drag my entire portfolio down?
So I think, Mubina, what it needs is really more professional approach. It needs a lot of studies, so every day you see, there are so many articles, so much of good content, especially, for media TV like Economic Times, you all create so much of content. Investors need to really read some of those articles, really watch some of the shows, hear the experts, what experts are seeing, So if you see, everybody is coming and kind of explaining about the industry. So you will see, CEOs and promoters of large companies and coming and explaining what is their outlook, and how they believe this whole pandemic will evolve into it, So that will give you a lot of amount of data information, and then you have to use your common sense and your knowledge to kind of use that data to define where do you want to invest. So, for example, a simple investor may understand that tourism may not do well, a hotel industry may not do well, So automatically, these are the industry which may take some time, for it to recover. So a prudent investor will say, okay, what do I kind of reduce my exposure, kind of move out of it here, and he knows, there are essential things which are doing well, there are pharma stocks which are probably need of the hour, so then you kind of keep looking at the various expert opinion, take a note of it, and then identify, are you rightly balanced in terms of the industry, in terms of the companies where you have invested. Look at the financial quarterly, filings. You get to know whether the company is growing, degrowing, what the management has to say. Each management kind of comes out with their, plans of the forthcoming quarter or for the year. So you kind of look at it and see, are they really growing, or or they are into really difficult situations. So I think it needs a calibrated amount of study and deep involvement to really figure out which industry, which stocks they should exit, and which industry, which stocks they need to increase their exposure.
Okay, understood. So that's just some advice coming in on how you can go about, managing your investment. All right. And then finally, I must ask you this question as well on value investing versus growth investing. For all of our viewers, value investing is basically, as the name suggests, looking for value, a good bargain. So one parameter would be that the price to equity is very low or very small. Growth, on the other hand, means that, the price to equity may be a little high, but the growth opportunity over here seems to be pretty promising. Now, when you think of growth investing, or rather when you think of growth investing, think HUL, think your consumption names basically. Think an HDFC Bank as well. Interestingly, Mr. Agrawal, that's one pocket that's really been able to perform very well, in the last couple of years. On the other hand, value, well, maybe not so much. Though again, the last 2-3 months, we've been seeing a lot of interest coming in value-based investing as well. I mean, some of your value-based mutual funds too have seen a nice recovery in NAVs. Though, of course, again, you should not look at it short-term, you have to look at it long-term. But yeah, what do you think should be an investor's investment mantra right now?
Mubina, the right thing is to keep a balance. Believe me, there's no right thing to say whether you should put into a value stock or a growth stock. These are those approaches or methods of investing, if I may call it so. So this actually essentially helps you find out right stocks to invest into it. So value method will tell you which are these stocks.
Oops, unfortunately, we've just snapped that line with Mr. Vinay Agrawal. Wish we could have just gotten his last word on that. But I guess technical problems and perils of work from home, I guess. But Mr. Agrawal, if you can hear me, thank you so much. Really appreciate you joining us today on The Money Show with all of your valuable advice and as well giving us some insight tips, if you could call it that, on how to make the best use of the Angel Broking app. Okay, on that note, we'll take a very short break, but when we return, we will be solving that dilemma of buy versus rent for residential real estate and be getting in some opinion on commercial realty as well, including a company that provides you commercial real estate, and that too for a retail investor. So we'll take a break, come right back.